Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday morning pre-market webcast. Okay, so we continue to compress. I mean, we're compressing at highs, but I mean, we're just kind of flatlined here. You're not seeing a lot of movement. You're seeing gradual higher lows. You're seeing a gradual conversion of the 9-minute simple moving average. You saw yesterday, here's the hourly chart, we talked about the bears cannot convert weekly pivot. Nope. They tried all morning yesterday. So these morning dips continue to be bought in all the right places by the bulls. And as long as that continues to be the dynamic, then what you're going to see is gradual upward movement in the afternoon sessions. There's just, there's no reason to start to expect a dramatic shift while the process of buying dips and dripping them up in the afternoon is working. So what I'll be looking at this morning is on shorter term time frames, you've got daily pivot 72.5, you've got weekly pivot 69.5. Does this band of price really make a decision today about whether it wants to be support? If it does, then that 24.80 half high is not going to survive the week. If somehow the bears can convert this area of price, and I don't think it's going to be a gradual conversion. The trouble with moves like this is that when they break down, they tend to break pretty hard. They just kind of pull the rug, as my buddy Tony Rego would say, and that's that. We'll find ourselves down in the 50s in the blink of an eye. That's not necessarily bearish. The problem with moves like that is talking about dip buyers and, basically anybody with a mouse and a dream can come in and buy that pretty easily. It drops like a rock, then it bounces, people buy it. You got people getting late, shorting in the hole. As the market careens down, people say, oh, I'm going to miss it. Okay, I'll short it. Boing. That's how squeezes start. The best thing the bears could do for themselves would be to gradually move this market down. Stop doing these. See this 2 hours of violence? What happens here? Boing. And then you make a higher low. Can't take out the weekly pivot. And then off you go. The bears would be well served by a gradual move down. So, okay, that sounds great, Mike. How do we do a gradual move down? Well, you do a gradual move down by converting this three-handle area of price, taking out yesterday's lows, and then closing somewhere around here. And then you do it again tomorrow. You do it again the next day. It's about consistency. What do I see here? I see consistency. Higher lows, higher highs. The bears need some consistency. If they can produce that, then what you'll see over time is a conversion to the 9-day simple moving average. We'll come down and we'll engage the daily mid-band. And that's where the market decides on longer term time frames if it wants to be buy dips or sell rallies. Remember, futures that want to trade between the middle band and the upper band are buy dips markets. We've been in one for the last 15 sessions or so, going on 20. Before that, all that resistance at daily mid. Those are sell rallies markets. So for now, it's a buy dips market. If the bears want to get to that decision point, we're going to get to the decision point one way or the other, either as a function of time or as a function of price. This 20-day moving average, as it sheds lower prices, will come up to meet price. It's starting to do that now. You can see the angle of it. But once it gets there, the bears are going to have something in the tank in order to convert it. And the best way to have that happen is on a gradual move down versus a violent move down. All right, everybody have a fantastic day. I'll have the midday update out in a little while. Trade them well, and I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.